Welcome, I'm Digital Micro. This is the Digital Micro Trading Journal video, Day Trading for ROI, and this is about prepping for May 9th, 2022, benefits of your trade exit, because it is all about the trade exits, good, bad, or ugly, how you do in the journal, how you do in performance. Trading is a performance sport, and it's all about the exits. So let's look at the benefits, because at some point in the trade, it's all about the psychology and the mental capital you're spending, you're keeping, you're preserving. So we want to, especially for the trade journal, look at how we're doing for the day, each trade, and the week. If we're not making the return on investment, probably we've got to rework and rethink how we're doing the exits. I always remind myself an exit is like a quick death of the old. It allows for the rebirth of the new. So if I'm clinging to hope, which is not a trade plan, or it's going against me harshly right away, and I've not even got more than half of a position on, I've got to think about just the quick exit, because I need to allow for the mental and emotional and psych capital for a rebirth of a new trade setup and get on to the new one. Because the more rotations in a day trading session, the better chances my win-loss ratio is going to save the day from one bad one. So that's just my thoughts from last week, especially in these very volatile markets, because there was a point when I went on tilt in the afternoon of the FOMC day, and I didn't do a quick exit. My exit was horrible. And once I finally did get out of it, everything was so much better. So again, I've just got to remind myself, even though it might be an ugly death, it's going to allow for the rebirth. So just to sum up this benefits of trade exit, again, the rebirth gives us a new trade setup. We're rebirthing into a new opportunity with a renewed, replenished mental capital and psychology, and that's everything. So many videos I hear veterans, very successful traders. Recently, I was hearing about Shark from SMB, and he used the word psychology multiple times because at his level of success, he's always trying to improve. But again, it's psychology, and new trade setups allow you to go in fresh and replenished. And that's what it's all about here. So again, that's the conclusion. Let's go to the charts. Let's look at location and possible strategies. So I don't really look at the weekly for my prep for the next week, but I'm doing it now because what's standing out on the red arrow, second time in a row for 2022. And it's not like this hasn't happened before, right? Earlier in the year, we had this happen, but we are lower Bollinger Band here. So quite a puke out here with the markets, and we're just into May. So that's really got my attention here. I'm not going to, of course, sell into the hole here. That just makes no sense to me, and I am absolutely going to refrain from shorts at most levels of what I look at for this coming week. So that's one thing. The second thing is, and when we open on this new weekly bar here for May 9th, what I'm going to really look at here are where we are on the 3 EMA volume weighted moving average and the 4 volume weighted moving average. That's going to tell me a lot. So that's all I need from this chart. Let's go to the next one. So I don't do this often either. This chart's a comparative analysis of where we are on the left with the MES. That's the S&P 500 year-to-date volume. And look at the red line horizontal here. We had 2 days of peak red volume bars. So I wouldn't say that's a capitulation, but for me, what I'm going to really do is keep my eye out for Monday. I do expect we will have a continuity of another high volume, but I'm not convinced it's necessarily going to be that color necessarily, but I'm going to be flexible about it. On the other hand, on the right side, you can see Friday was much higher, so obviously nobody wanted risk on over the weekend, and so we did have a lot of selling. The point I'm trying to make, though, is was it overdone? Was there a capitulation? So that's it for the volume. Let's go to the 20. Oh, by the way, these are volumes on the 24-hour chart. So let's do the next chart on the 24-hour price chart candles. So this is the nitty-gritty 24-hour Russell 2K micro chart, and you can see we again tagged lower Bollinger Band here, but we didn't close at it or below it. We did close above it. But what I'm looking at are these zones here, and the zones are going to be how we open. So I'm looking here for this opening Globex range of May, 1868.9 by 1863.9. We're going to tag this again. I don't know when, but it's a level I'm going to watch because that's where we opened. That was the first 60 seconds, basically, first 30 seconds of May. And you can see here the bars on the 24-hour. We were above it, holding above it, and we had wicks, and then Friday we just puked down on it. So that's the key zone here for me going into Monday, Tuesday. And, of course, we got a new bar for Monday in Globex. We'll see where the gaps are from the 3 EMA, 3 volume, and the 4 volume weighted moving average. But this Globex opening range from May 1st, I am going to look. And just the last indicator here on a level from order flow is the FOMC meeting level. So that's coming in at about 1876.1 on a volume weighted average price level. And again, that's the May 4th FOMC. And that was a big deal because you can see where the dot is here on this green bar. Somehow a lot of people thought, oh, goody, we're not going to have cuts of 75 basis points. Let's drive it up. And overnight, once the RTH opened the day after the Fed announcement, everybody realized it's still horrible. We're going to have a lot of rate hikes, whether it's 50 or 75 basis points. They're just going to keep coming. And this hard red bar down. But notice how we kept above this open range here. So Friday, they just couldn't hold it, and this thing broke. But again, we've had just so many days on the lower Bollinger Band here. So I'm going to closely look at the reset bar for Monday and then take it from there. But this is going to be very key on the 24-hour for Monday's Globex Open. Let's go to the next chart. Okay, the last chart for the preparation for Monday's Open is this 120-minute. And what I'm looking here is look at the dot on the blue closing bar for last Friday. So that's the anchored VWAP close, 1830.7. So I'm going to look at the open price versus this price right here, 1830. And then I'm going to compare to see where the reset is on the middle Bollinger Band, the anchored VWAP from FOMC, and of course the one that I mentioned in the previous chart, which was the opening May 1st range. So there you have it. 3 confluence zones I'm watching, and then the closing anchored VWAP for last Friday, all on 120-minute. And just below it here, taking a look, we have a very low RSI that's been hanging out for a lot of bars for basically in the 30s. So I think we're oversold, overdone for a duration, and at some point in the Monday, Tuesday, we recapture middle Bollinger Band, and we also spank the May 1st opening range. That's just an opinion, and again, it's not a trade recommendation. Remember, this channel is a trade journal only. It is not a trade recommendation. If this has helped in any way, please hit the like, subscribe. Take care. Aloha.